If you don't know why you are investing, you will never know where to invest. At your old age, you have only one friend. And forgive me for saying that one friend is money. Create enough passive money as early as you can. And once you start eating out of that money, it's a different high in life, trust me. Today in India, the retirement is the biggest ticking bomb. If you shut your eyes and you think of the money you have, and if you didn't work today, how many days it would give you a survival is the amount of wealth you have. The best day to invest is when you have the money. At the end of the day, it's your life. If you don't do this, the risks are pretty large.
Hello, hi. Welcome to Investing with Dhan. Today we have with us one of the best leaders in the mutual fund space in India. We have Mr. Swarup Mohanty with us, who's the CEO of Mirae Asset Investment Managers. I'm going to be talking everything about money, markets, and personal finance with him. Get to know firsthand his learnings, his relationship with money, and what we can learn from it. So let's get into the video and do subscribe to this channel. But now young people also, honestly, I was having a conversation with one Gen Z, like my friend's younger brother. So I told him, third year engineering. So what are you doing currently? Internship. He's like, no, I made money, enough through IPL. And I'm like, what?
Please understand, IPL is not about cricket on the stadium. That's got nothing to do with the actual thing.
Yeah.
It is about Dream 11. It is about betting. It is crazy what is happening there.
So I asked him, how much did you put in? He's like 2,000. And how much did you make? I said, throughout the season, I made 90,000. And he's like, कौन सा internship इतना देता है? And I said, do you think this is sustainable? I genuinely asked him. He's like, नहीं, अभी World Cup आएगा ना. And then, so Dream 11 भी नहीं. So there's this new craze among them, which is stake.com.
No, I'm just saying Dream 11 meaning the betting.
Yeah.
I'm just saying Dream 11 as a name.
Stake.com and all. So then so I was like, how is this sustainable? It's like stake.com pe you go anytime, 24/7 live casino hota hai.
Why should somebody invest in mutual funds?
Yeah.
Mutual funds have to appeal to them, no? And especially the young, they have definitely more knowledge than we did. Their economic status is very different.
Yeah.
And means to invest is on the phone, right?
Yeah.
So, a lot of work for mutual funds actually to make ourselves savvy enough to appeal to them, right?
Yeah.
Nahi to all this will happen.
Yeah. So I used to think, and there was this very interesting statistics that came out saying, 14 crore demat accounts, but look at the OTT subscriptions. Some 50, 60 crore people have subscribed. I'm like, if they were smart enough to do that, but they're not doing mutual funds or just investing in general. Then I looked at the stats of real money gaming. So the real competition is not even OTT now. I feel it's all of these betting apps.
True. So, see, that's where, money always finds its own way. Money is fluid, right?
Yeah.
How do you channelize it to this place we were discussing somewhere and they were asking me, wealth creation ka raaz kya hai? And I was saying that raaz is to generate the need of investing. You are finding compulsive reasons to buy a new phone, new TV, but you're really pushing yourselves to invest 1,000 rupees. And that's where it changes, right? The only thing we will need as we grow is money.
Yeah.
And then that need, once it comes, lot changes. I think all of us have to work towards building that. Is the most important thing.
So that is something I want to discuss in detail. But now that, we are talking about money and mutual funds and everything personal finance, there's a lot of information, gyan available online. Ki, personal finance, aap ye karo, aap wo karo. I want to ask you, what you should not do for personal finance?
So I think first of all, we have to realize that as we grow old, and I'm slightly older than you to say this, is that 99% of that gyan is noise. Or breaking the clutter is the biggest debate. I think that starts with everybody's own life. And for the sake of repetition, whenever I do this, I start from the basic, is that everybody's life is different. So that your life and my life and the way you will lead your life, the way I'm leading it, may not have any correlation because my life is mine. And both of us are right? Yeah. Is to first ask yourself certain life questions. What do you want from your life? And everybody's life questions are right. And once you know what your life, at least you can have a fair, fair judgment of what your life can be. Then you collate those information to that. No, some amount of sense will start making. Otherwise, a lot of things are happening in the world and they have no relationship with what you are. There are two things that I got very clear early in my. There's this great writer called Carl Richards, and he would say anything. There is a lot of things that happen in the world, and there are a lot of things that matter to you. That subset of what is happening and what matter to you are what you have to focus on. If it does not matter to you, it does not matter at all. Till you are not able to break that clutter, and it takes time and probably some age to find that subset. Otherwise, you'll be it's very easy to get buried in the noise. From an investing perspective, then finding meaning in the form of your goals is where the starting point is. Once you figure that out, why you need that money, where to invest is the easier part. Problem happens is when you go to where first and not have any correlation to your why.
Absolutely. I think that's very, very important. And as you mentioned, right, a lot of us forget that personal finance is personal. Like you can't copy paste Excel template someone is showing you, okay, 10% allocation here, 20% here, but it doesn't work out.
It doesn't work.
Like I really feel personal finance there's this emotions very, very important which are not considered. Like my priorities can, some things that I'm emotional about could be very, very different. So how do I just take one template and copy paste it, right?
If I tell you what my emotions are, you'll say, boss, ye to pagal hai. Exactly. But they are my emotions. They are what I'm striving to achieve in life, right? And I'm right. So once I know that this is what my achievement or what I would like to do, then how to go about that becomes easier. Right, but not knowing that is where is the problem.
So I want to, touch upon the fact that when you first started making money, right? Like, what was your first salary and how did you spend it?
So I think it started in a certain way, but it's very unfortunate the way I started my career is that I was an MBA and I ended up with an accounts job, and I didn't know that. Okay, you go on a campus and they assign you somewhere. The statement my first boss ever made was, what are you doing with this job? You shouldn't be here. That's how my career started. So I had to leave that and restart again. And when you restart again, then you are from the bottom. Okay, I mean, to be fair, I didn't have much money then. A lot of my colleagues don't believe me, so I used to carry my salary slip for a long time to say that yes, my take home in the mid-90s or early, whatever, mid-90s was some 1,600 rupees. I had a scooter, so my petrol bill was 1,000-1,200 rupees. So how do you lead life? That's a separate challenge, separate debate. So investing came a little later because the first 4 or 5 years was practically surviving because I got out of the campus placement which was given by my institute, and I again restarted practically as a graduate. So life was a little different, and an approach to that took a longer time than it should have.
So there's always this, opportunity cost involved, right? So for people starting out who are delaying, child start baad mein, abhi let me finish, this goal. I want to buy a new iPhone and I want to travel. How can someone balance that? Like, can you explain the opportunity cost of starting late, both in terms of career and investing?
See, a lot has changed between my time and Dhan. We were discussing that before that. Is that the flow of information that is there today was non-existent there. So the only excuse that I had, genuine excuse, for not investing then was I didn't know. And there was no way you could know because my bosses were also not investing much, right? They were building houses and all that, the typical things. But today, with all this information, what is dawning are two things. One, the requirement of money is very large. And as you grow older and people are going to live longer, at your old age, you have only one friend. And forgive me for saying that one friend is money. Right? That realization is there in everybody's mind. We stand up in various forums and we ask, what is more important to you, wealth or health? Everybody smiles and tells us health in their mind is wealth, right? So that is point number one. Point number two, then once you realize that you need money, it is natural that when we start working, we try to fulfill our fantasies first. Our needs come later. But catering to the needs is a given. The more you delay it, the more you put pressure on yourself. If I had started at that age with 500 rupees per month, the amount I have had to invest now, I have to invest because I'm heading to is putting a lot of pressure on myself, and I'm now bound in those figures and not able to do a lot of things which I would have. That's my learning, right? So the younger you start, the better. That's the best thing that you could do. But if you've delayed it, then the sooner you start planning for it, the better. And every day is right. You can't delay it by another day. The day you realize it, that's the day you sit down with your life wants, which we call goals, and then you start your plan. And then you start investing as on yesterday. You delay it further, this pressure goes up. And that's something which you cannot delay for long, is my only submission.
And how do you look at, opportunity cost in terms of your career? Are there any examples from your life?
Yeah, I think, the fact that I could have started mutual funds a little earlier. A friend of mine came into mutual funds 1 year before I did, and he kind of told me, because I used to sell fixed deposits earlier, and he told me, why don't you do mutual funds? And I told him, that form has nothing written, my form has everything written, you do it, I'll come a little later. But because I delayed it by 1 year, and trust me, he became a CEO, I think 4 years ahead of me. That's how the gap widens. One has to take or realize those opportunities far earlier, and preempting tomorrow should come a little bit early in life. You have to back yourself. The earlier you back yourself, the better you are. The more you seize the opportunity, the more time you get to play that opportunity. Sometimes you stay in the comfort zone. There is that cliche I was saying about being in the comfort zone. You have to break comfort zone every day, and that's how it works. The only thing that you can do is hard work. That's your only controllable. The other part I'll add is some amount of time has to grow into preempting the future and understanding future trends. It's not rocket science to understand them. But acting on that needs a little bit of push and guts. Sooner one does it, better. Otherwise, the more you delay, the young now are there to do your job at half your salary. And they are better than you, is for sure, because they are far better educated, they are far better in knowledge, and they are more confident than you are, is a reality.
So I think in personal finance, right, it's as much as about where you're investing your money, it's also about your relationship with money. ये लोगों को नहीं समझ में आता, like, they can't introspect that, or subconsciously they know, but just not aware about it. So how was your relationship with money back then, and how is it now?
Yeah, it's a very, very interesting and very deep question. I'll tell you why. Because I came from a family of teachers. And when we grew up, talking about money was not right. पैसा नहीं दिया जाता था, because if you give money, बच्चा बिगड़ जाएगा. On a hindsight, I realized all this was there because there was no money. If you look at some of the business communities in India, money is taught very early in life. It's not about how much money you have. But since they start learning money early in their life, their approach to money is far more practical than ours. And I grew up for a long time in my career saying that money is bad. Suddenly it flipped, and I realized money is the need. Right? And you can't do anything in life without money. It's a reality, whether one wants to face it or not. So because of that baggage I carried, my approach towards investing came on the job. Initially, though I was learning it was theory. Putting it into practice also took time. But once that came, and since it was a little late, then I had to double up. Right? And then thankfully I got to read some things very early in life and put them to practice. To be fair to me, though I started, the first maybe 7-8 years went by in some other instruments, but when I graduated, then I graduated well, to be fair to myself. Then I put my goals in place, I put my plan in place. It took me some time to realize the risk profile of myself, because earlier we used to think we all were fund managers because we were working in mutual funds and we knew the markets, so we were creating some insane amount of mistakes, which you started sort of curtailing. But just to answer your question, because it's sooner you start understanding and reading and learning about money, better for you. The more you start practicing it, the better it is. And then you learn money by the day. It does not come naturally to people like us who've not been taught very early. But where there is money, and I always say money has its way, understanding that way, it can be good and bad. Understanding the good way of money also takes some time.
So you mentioned that you knew your risk profile, then you sat down with your goals.
I didn't know my risk profile.
You came to it eventually,
Yeah.
right? Like, so see, again, for a lot of people like our age, like we don't know how to do it. So like, can you explain what does that process look like?
See, Shraddha, nobody is born with a risk profile. You learn risk profile,
Right.
and risk profile changes with your life. Like when you start this investing journey, you start thinking this is a return generation process. As you mature as an investor, you realize that it's a risk mitigation process.
Correct.
The closer your investment portfolio is to your risk profile, the better your investment journey is. I'll give a small example. Like say, I've done my maths and I feel my portfolio return, if it is between 10 and 11%, and please do the maths, 10 and 11% compounded over 15 years is a lot of money, right? Since it is 10 to 11%, I know where to invest. More important, I know where not to invest. Because I want my downside protected at 10%. I don't want to invest in a certain risky class of investments. They are good. I'm not saying they are bad. Between me and my mom, she invests in them because she has her pension. I'm creating pension. We are two different investors. Does not make her a greater investor or me an inferior investor. Every year I sit and I review this. If I'm on track, great. If I'm not on track, I look at the mistakes and I correct them. It is a very mathematical, unemotional way of doing this. But it took years. I started holding my allocation after I turned 40. It took some time because earlier, in a day like today, which is pre-election day where markets have gone up 3%, I would be doing something. But I'm just watching the market because my allocation is there, that allocation is growing, and it's made up for a lot of some of the things I'd missed in the past probably. So when you look at investing and you begin it, don't put too much pressure on yourself. Put pressure on knowing what you want to achieve from this. Give your investing journey a tangibility. It can be as mundane as I want to buy a phone in 2 years' time. Everybody's upgrading phones now. If you do 1,000 rupees SIP in 2 years' time, you can upgrade your phone. And phones last 2 years. Once you start getting a new phone, you'll get the kick of life. That, okay, this is possible. And make it as tangible as, okay, here's a car I want, or whatever, it depends on people. But the day you are able to redeem and buy the car, you will understand the process. But risk profile is something which you grow with. Risk profiles are two types. One is a factor of your life. Like when I started working, I was a different risk profile. When I got married, I was a different risk profile. When I had my son, my risk profile completely changed. And now when I'm preparing for my retirement kitty, I'm a different person altogether. So stages of life changes, plus the market dynamics also change your risk profile. Many pedigreed investors, when market tanked 40% during COVID, would have rethought their entire risk investing process. The moment you see some amount of discomfort in market movement versus your portfolio, you need to act. And you have to align that truthfully to your risk profile. Nothing wrong with it. Within your risk profile, also solutions are possible. But all these do not come naturally at a young age. The more you learn, more you take the journey, the better you will be at it. I definitely feel the young will invest better than we did because of information and their ability to learn. More important, I think they have a bigger ability to unlearn because their ego stage is far lower than our ego stage.
So let's look at, a journey of someone who's they've graduated, getting started with investing. They have their goals, like any young person starting out would. I want to travel. How do we build a portfolio then? Like, what should be their approach?
See how it has changed, okay? The young are changing their lives to experiences over assets.
Yes.
This is the second time you've said life goal is travel.
Yes.
When I was young, my life goal was a house. Okay. It's brilliant that this is happening. Okay. And when you do that, suppose you want to travel, put the amount that you want to travel at. Suppose it's say 1 lakh of rupees or 2 lakh rupees. You want to travel in 2 years, you want 2 lakhs, right? There is a salary. So let's take for a minute that salary is say 30,000 or 50,000 rupees a month. How much do you have to put in to reach that 2 lakhs in that many years is just mathematics. Suppose you derive at a return of say 12% or 13%. Now 12% when the existing bank rates are 6%, you know they cannot be achieved through debt. You have to move to capital markets. And when you look at capital markets, you can Google up a bit to understand on the past which part of the market has been given 12%, which part has been given 15%. Some would have given 7-8%. And that's how to start. The more mathematical you make it on the return generation possibility, it is easier to find a solution to generate that return. But you have to do your holiday in 2 years. So you have to track it very efficiently to see whether you are on track or not. So the review of that portfolio is most important. If you made some mistakes, then you can correct them to get you back on the. If you are ahead of it, fantastic. Do the journey a little ahead of time. Nothing stops you. But put it mathematically, and then arriving at a solution of investing is easier. Most important is you should know why you want to invest. I'm repeating this for the sake of the importance of it. If you don't know why you are investing, you will never know where to invest. But put your goals down and put those timelines down. Sometimes it might happen that your goals are unrealistic to your money you have. It's okay. Maybe you'll have to delay your goal a bit. But in that way, you will definitely achieve your goal. Right? So once you put it mathematically, things become clearer.
So, there's this trend going around wherein younger people are believing in this concept where money will come back, but I will not be this X age again. Say, money will come back, but I am never going to be 27 again or 29 again. So they prefer experiences or, investing in other things they want to buy over investing in equity, mutual funds, or just directly getting started with stocks. So that brings me to one point and, consumption. Now, a lot of us, leaders, we keep saying India will grow on the back of consumption. India growth story is consumption, manufacturing, infra. So I've always, think about this. On one side, there are people who are consuming, but then the other side of it is also how much will you consume? Like, where do we find that balance that we know for a fact that consumption has to go up for us to grow as a country? So, like, that's something I always keep thinking about. So I would love to know your thoughts on it.
My submission on this is consumption is not yet started in India. We are a low and mid-level consumer. We will graduate to mid and high-level consumer. You girls will be known by the bags you carry. Trust me on this one, right? And it's just the beginning. So you have to prepare for that. Nothing wrong or right. Yeah. See, you're going to buy that bag, just for an example, from your own money, right? That's the beauty of the young of today, right? Yeah. And the young of today back themselves on these ones. Right? Absolutely, you should live your life. I think what has happened to broad people also post-COVID is they're living their lives far bigger than they were before COVID. Yes. That's a general trend. And if you're earning money, why not? It's up to it. But if you can just spend some time in creating an avenue of that money, because two things are going to happen to the young, okay? And especially to women, okay? Two things is we're going to live longer. Earlier, people used to die earlier, so you didn't need that kind of money. Earlier, a lot of people were pensioners from the government. Now that part is dwindling. So if you're going to live longer at a time when you're physically weak, the first thing that you have to prepare for, apart from these requirements, is your retirement. Please, today in India, the retirement is the biggest ticking bomb. The sooner you achieve, you cannot imagine how much you can achieve by just putting aside 1,000 rupees at your age for that retirement. It doesn't need a lot of money. Yeah. So that is one thing which you cannot compromise on. That is a separate, segregated portfolio. And invariably, what happens, you start redeeming out of that for your own time. There's something called compounding. There's something called reverse compounding. Reverse compounding starts happening. So please, just read up all this. It's very easily Googleable. But first thing I would request all the young is understand that you're going to live longer, and women are going to live longer than men. So you're going to need more money than us, right? So that is one. Secondly, all these consumption trends will need more money, right? Earlier, kya hota tha? We used to travel somewhere right? The best part of young is they travel and stay in hostels also. They're pretty chilled about this. Unlike, we guys, we want to do it in a certain way. So whatever be your travel requirements, whatever be the experience that you want to gather, will need money. Think about generating that money in a passive form rather than from your salary. Put money where it grows, and from that growth, if you can fund all this, the satisfaction that you'll get yourself during the trip will be a different high. So these are very simple things that you need to know and do. Create enough passive money as early as you can. And once you start eating out of that money, it's a different high in life, trust me.
But again, this requires a lot of patience. When I talk to younger people, about their personal finance, money habits, what I get to know from them is, okay, I'm not buying a sneaker. Sneaker is an investment for me. 2-3 years down the line, it's going to get more popular. I'm going to flip it around, make 30-40x on it. Or maybe I've bought a luxury handbag and it's an investment, in 4, 5, 10 years, I'm going to make whatever 15-20%, 15-20x return on it. So how do we convince this generation, one, about pros, cons of instant gratification, especially with regards to money, and how do we get them to invest in mutual funds?
See, 2-3 things. Yes, I agree sneakers make money. I agree a good bag makes money. But the bag has to be kept in a certain condition. The sneaker has to be used. A lot of money is being made on sneaker trading. Okay, if somebody can do it, great, make money there. Who's stopping you? But that also comes with certain conditions, right? So these are new avenues which have started, which I never knew. For our generation, watches has become a big trend, right? You can buy a watch and make money out of it, and it's probably giving more returns than a lot of other places. But finally, if that's your way, do it. But there is this easier way of this side. I've seen enough people in sneaker trades in my life, and there are a long period of time when a certain brand just goes out of vogue. The sneaker brand that is there today, and I don't want to take brand names, I can get into it. My son is 25. I'm in that same discussion with my son. But what if that brand is there, some other brand starts taking over that sneaker war? What used to be a 1 brand sneaker war is now a 6 brand sneaker war, and it's getting warmed up. So what if your sneaker does not find value 3 years later, right? But it is easier to make money from that perspective in the capital markets, and especially in a country like India, which is going from 3.5-4 trillion to 8 trillion in the next 8-10 years. And there are very few countries which will double the economy. And the better way of earning this is through the capital markets to get that growth of the country, which is evident to you. And it's no rocket science to understand this growth. You can it's there in front of us, right? And the best way of getting that growth into your lives is through the capital markets. You can put some part of it, maybe one sneaker money can come here and enjoy the growth of the country in your lives. And the power of this should not be underestimated. And the young your age are too clever not to understand this.
So, like, consumption is just picking up or hasn't, reached there where it should be to grow us as a country. Now, there are 2 aspects to this. One, consumption that is happening on the back of higher salaries which people have gotten post-COVID.
True.
A lot of, ESOPs, people have made money from there, or just the baseline salary shift has happened in a lot of roles. Startups are giving, higher salaries. But another thing what is happening is on the back of debt. Young people are borrowing money to fulfill whatever. Again, travel as an example, or I want to buy something. So how does that look like? Because I definitely think it's not sustainable.
See, like I said, consumption will grow, debt will also grow.
Yeah.
Okay. And many people will slip for it. But what happened during COVID is pretty staggering in our lives. Okay. And it's a life lesson which all of us should reflect on.
Yeah.
It's the first time in our lives we could segregate between our need and want. And it was very clear.
Yeah.
And lot of things which we used to lead our lives on the want side, thinking they were needs. Or without a movie in a weekend, how will we lead life? Okay. and that one bucket of cornflakes, whatever that, popcorn at 1,000 rupees. Without that, the hota bhi nahi tha life.
Yeah.
All that didn't happen, but life was okay. I had thought post that people would be able to segregate their income expense statement to find that surplus, to channel it to growing that money, right? But consumption has taken over, and hence that gap or that extra money is going there. Right or wrong, I am nobody to comment. Right? At the end of the day, it's your life. If you don't do this, the risks are pretty large. And I can scare people by saying this, but one needs to be scared. If your requirement of that same sneaker was 5,000 rupees before COVID, today it is 15,000, is a reality. And that's also an entry-level sneaker. Right? In our young age, it used to be 5,000, used to be an expensive sneaker. What used to cost us, say, 30,000 rupees for a foreign travel is now 1.5 lakh rupees. What used to be a 15 euro lunch or dinner in Europe is now a 30 euro lunch or dinner post COVID. And all of us know in Europe, they don't let you share dishes. You have to have 2 dishes if you are 2 people. So those figures are in front of you. Are you eating into your salary to pay for it, or are you creating an income to pay for it? Separately is a question which everybody should reflect. If they don't, then higher the salary or growth in salary, higher the consumption. Who doesn't want a new sneaker? Just coming back to the sneaker discussion. Or who doesn't want a new car? But if you can create a surplus income which can start contributing to this, and you can channelize a lot of your salary or your income into creating that, I would say you would do justice to this great acumen that you all have and the great information flow that you all are getting, which, to be fair to us, we didn't have. So if you're not putting that into use, you're actually doing yourself a big injustice.
So consumption going up is going to, come on the back of manufacturing doubling down. We need infra for that. So at Mirae, how are we looking at all of this, like consumption, manufacturing and infra?
See, at Mirae, we were one of the first people to identify consumption globally. Our consumption theme globally came 15 years ago. Our consumption fund in India is 13 years old. And I would really request you to pick up this fund and compare it with any fund you want on the parameters of any performance parameters. Do that thing. And all of us know that the consumption theme is another 15, 20 years to go. Right? We identified, and it was our house call 2 years ago, that India was typically a service-led economy, and then we kind of said in a lot of our presentations, now or never. If India does not shift out of the service-led economy to a more broad-based economy, India's journey was only that much. And thankfully, through PLI, the birth of manufacturing happened. We developed a very unique manufacturing index. It's an ETF. You should see it. And the last 6 months, it just rocked the market, that index. But it is a 15-year secular run now on manufacturing. If you want to get in early into any theme in India, it is manufacturing now. It's like getting into consumption, say, 10, 15 years ago. Say it's a very interesting story. When I started my career in mutual funds, our portfolios would read banks. Then it became banks, NBFCs. Then bank, NBFCs, financials. Now it's bank, NBFC, financials, fintech. A theme will grow. 13 years ago, consumption was practically FMCG. Now it's a broad-based thing. 4 years ago, when we launched our healthcare fund, it was practically pharma. And I'm asking a very interesting question. Okay, suppose I think I will be a fitness guy. Can I become thin while jogging in that white Bata kids that people used to run in? No. You have to be caught in a certain sneaker. You have to be caught in a certain attire. Of course, your earplugs have to be different. So the point I'm making is healthcare becomes a far bigger universe than it was just pharma. General insurance medical insurance will be a big part. So thematic investing is a brilliant way of approaching investing, and it has not yet dawned on to Indians. Indians still invest in market cap, large cap, mid cap, small cap, you form your portfolio. But incredible opportunities are there when you think or see beer. I don't think worldwide people invest in market cap. Worldwide people invest in ideas. And the new idea today definitely is manufacturing. The idea for tomorrow will be EV. Globally, we have Global X, which is our global ETF partner. When they launched their social media fund, Facebook was not there. I'm not talking about IPO. Facebook was not there. Think of the person who went in there. Their lithium, EV and lithium fund is 9 years old. We started talking about last year. So if you catch a theme early, you can ride it for 15, 20 years. So themes like manufacturing, things like banking, just getting penetrated today. And then look at what broking has done to that entire space, right? It is just set to grow. Payments, which used to be a sad part of banking, now is mainstay banking. As technology goes, as digitalization takes over, this world is set to stay. So change completely. So identifying some of these trends early and sitting in them perpetually is what creates a lot of incremental wealth.
So now let's move on to someone, in their mid 30s. They want to get better with their investments. So how does one look at it at that age, given that, you have a kid, you probably have a home loan. So what should be the investing approach? Let's take these two examples that, I have a home loan to pay. I have my child's education to pay for.
I would still recommend not buying a house and not having that home loan. As people today, rental income is 2%. So buying in that house, staying in that house at 2% is far better than paying a home loan. That's point number one. But let's come to that later. But one point I'd like to highlight is education inflation is one of the most serious inflations in this country. And that's something which people have to factor in. When my son started teaching, I did not know that at class 9, his tuitions for his engineering would start. And they're extremely expensive, right? You have to start getting into classrooms at class 8 and all that. And so providing for your child's education has to start from the day the child is born. And you'll be amazed as to how 5,000-10,000 rupees investment per month can make a change to that. Start planning for your child from the day of birth, and because you get a 15-20 year time period, you can easily fulfill that. We have this colleague of mine who does this very interesting SIP for his child. On the SIP amount is the age of the child. So if it's 1 year, it's 1,000 rupees. Next year, it becomes 2,000 rupees. So at age of 15, he runs a 15,000 SIP. He said at age 17, I will redeem everything, and he's compounding it at 12%. I thought that was a very simple way of approaching education for a child. But the key is he started when his child was 1. Right? Similarly, there are hacks. Okay. Now, when you look at a home loan has 2 components. The principal component, the interest component. It's the interest component which kills you. Suppose your home loan is, say, 1 crore and you are paying, say, 9% as your interest. If your home loan is 1 crore, the SIP should be 10,000. Home loan is 2 crores, do a 20,000 SIP for that entire period. 20 year, do the mathematics on 10 to 12% on 10,000 rupees SIP for 20 years. A bulk of your interest payments would have come from that. Bulk of your principal can come from this. So be a little savvy and approach these small hacks to become investment solutions. And a lot of the weight that is on your shoulder for these giants which start creeping up in your life, which is in education, inflation, and the interest component of your home loans, can be taken care by small hacks. But yes, getting yourself educated and knowing these hacks are very important. Some amount of spending time on this rather than finding out the new trending sneakers might help.
Another thing that, let's talk about someone, who's mid 40s, late 40s, or just about to retire in a few years. And I see a lot of them in a very bad financial position.
Absolutely.
Again, I would like to discount that because they did not have the knowledge, the access to information.
No, if it's the 40s, they had knowledge.
Late 40s probably, or early 50s.
They had the knowledge.
Okay.
They were stuck in a fixed income regime. Right?
Correct.
They did not understand that suddenly they will retire. And then, see what has been the advice till now. Even for people at 40, 50s, at this moment you should be investing in safe instruments,
right.
which is fundamentally wrong. Because if a person is 40 and the person is going to live till 80, 85, that's what people are living to, it's about 45 years more. You're going to have 20 years of income to lead another 20, 25 years, right? And if that stretches to 30 years, it's going to hit you very badly. So you have to invest in growth assets to make this money grow. If you are late, then your asset allocation to growth assets, which are typically equity in nature, have to be substantially higher. Get to a financial planner quickly. Do your Googling as on yesterday. Understand that you are already in deep trouble. Get scared. You know, Robert Kiyosaki made this very interesting statement of what is wealth. He said you must, the amount of money, and he said it's not in a currency term, it's in time term. If you shut your eyes and you think of the money you have, and if you didn't work today, how many days it would give you a survival is the amount of wealth you have. So I read that when I was 26. So that's how I started investing very early. Now at 40, somebody should really put the assets in front of them and understand how many days they can survive with that much money. That will be a very scary thing.
Yeah.
And that scary part will lead them to start getting activated. If you have not got activated, you're already very late.
My mom has always been in stock markets and all. So both of them
Bas,
always.
sahi hai.
So my mom, she told him no then also. So we had say a loan, tabhi kuch 10-15,000 per month ka raha tha, and we took it from some company that shut also. So full loss. 15 years we paid the loan. And my mom is like, 15 years you would have done SIP.
Yeah.
So then today you would have been in a much better position.
You know Pinkal, Ahmedabad head? He called me one day कि सर ये साल थोड़ा इंक्रीमेंट चाहिए, मेरे को घर लेने का है. I said okay, क्यों घर ले रहा है? बोला नहीं baby wants a house. तू रुक मैं आता हूँ. So I went to his house and I sat him down. I said कितना रेंट दे रहा है? बोला 11,000. बोलता एक काम कर, तू अपने मकान मालिक को बोल मैं 12,000 देता हूँ, लेकिन मेरे को 5 साल का कॉन्ट्रैक्ट चाहिए. Every year I'll increase it by 10%. Whatever, we did the maths. And ये जो बाकी 40,000 ना, तो EMI देगा तो 50-60,000, उसका तू SIP चालू कर. So we started a 50,000 SIP 7 years back. ये Friday I was asking him, SIP चल रहा? बोला हाँ बॉस चल रहा है. बोले वो घर तो 2 बार तो खरीद सकता है अभी. Right? You know, if you देखो कभी वो 10,000 आप मकान मालिक को बोलोगे 12,000 देता हूँ ना मैं, लेकिन मेरे को आप रखना, वो भी सोचेगा अच्छा मकान मालिक, I got a good tenant. But it's just 2% of the house. So recently we were doing a meet in Sofitel, and one customer stood up and said कि सर ये बेटे के लिए एक अंधेरी में घर खरीदना चाहता हूँ, आपका क्या व्यू है? I said बेटा किधर है? बोला इधर ही है. I said उसको भी खड़ा करो. So I said अरे बॉस तुमको घर चाहिए क्या अंधेरी? On the mic, his dad is there. He अंकल सच बात बोलो मुझे तो US जाना है. I said आपने उससे पूछा है कि अंधेरी में घर चाहिए उसको? बोला नहीं मैं तो उसको गिफ्ट कर रहा था. बोला गिफ्ट जो कर रहे हो उसका कोई होएगा ही नहीं, तो मैं क्या करूं? मैं बोला वी आर डूइंग दिस विद द बैंक. I said बैंकर को बोलो इतना पैसा मैं लगाता हूँ, इसको ठीक से करो और जिस दिन उसको चाहिए उसको दे देना. सपोज यू आर बाइंग अ हाउस फॉर अ crore, invest it somewhere for a crore. The day he needs it, he give. And I asked the son, would you like that? हाँ uncle, that will be better. He's so sometimes people get caught in these fixed assets, which may, like my father, he very proudly tells everybody in Bhubaneswar, this house I will give my son. मैं क्या बोलूँगा कि I'll never come and stay here, right? Nothing wrong with his wish, but he's not catering. He wants to give it to me, but it's not my need, right? But so this, I mean, I bought a house because I got fed up of Mumbai brokers churning me every year. They had this thing, no, rent बढ़ जाता है, and if rent बढ़ जाता है, I've seen Mumbai मकान मालिक are ruthless, निकाल देते हैं. So then we had to buy a house. Yeah, let's continue.
So this debate, no, is all buying a home versus renting one. Like, can it be settled or can it not be settled? Like,
I think it is getting settled in your generation. See, your generation will inherit. Okay. So the need for buying the house, whenever you, in this course of discussion, whenever you've talked about your need, you've not even discussed this, right? It doesn't, my son has promised me he's not going to buy a house. He's promised me he's not going to buy a car. It's promising. I don't need, and it's great that they come to that, and we work in. We have a VC fund, so initially, you know the VC fund anyway. We were in. I think upstairs they first presented co-living, and I was telling who's going to stay in Bangalore. Co-living for the young is a sold out thing. People live very differently, and that's where I see this cookie crumbling very quickly. So maybe we will have that fascination of that own house. For that, I think the landlords have to change also their mentality, and it's going to happen very quickly. You will watch that. The need for buying a house will dismantle quicker than we think. My opinion.
So now I want to talk about, there is one emerging trend which I see. People who are retired, they have money. So, when we go talk to people across India, we speak to a lot of people and they come to us and say, I have 60 lakhs, I have 1 crore, I'm retired. What should I do? I don't know. Like either they'll go some shady scheme, some MLM, someone is going to, put them under which they don't know about. Again, people have gotten very smart with the scams, right? So I feel this is also one cohort that what can we do for them? So I think they've slightly moved on from FD. They do. They have their share of FDs. But given that, now a lot more information is available about, how to invest, where to invest. And especially they've also seen that bull run in the markets, COVID ke baad. So now that corpus is there. With younger generation, it's like, you get started with 500,000, but then they have a bigger corpus, which you can't really risk. So how should they look at investing?
See, my humble request is, what happens with these people, and I include my parents in that. Over the years, they've invested very stringently to reach to that kitty. And at the time of retirement, they have lost the power of spending. Okay, today we do sessions on not on retirement planning, on retirement spending. Right? There is a certain amount of, what can I say, they're a little scared of spending money. First part is mathematically educate them that this much of spending from that amount is done and it is possible. Once they are free in their mind, they will move out of this insecurity of what to do with the money. I think that's something which I see missing in a lot of elderly who I meet. They feel their money will get over. But mathematically, they don't realize. I'll give you a small example. Suppose, say, on 650 lakhs, say just for discussion's sake, let's generate a return of 10%. Okay. And say that, 9% you can spend, 1% you leave back. When you put 1% of that money, right? What is 1% of 50 lakhs? It's I don't know, 50,000 or whatever. That compounded at 12% for 30 years is a lot of money. 1% which you leave back. So once they get that maths, they will be able to lead their lives much better. They've slogged their lives. At this age, they should be leading a better life. I mean, I want to lead a better life after I retire, okay? Having bigger goals after, on some of the fantasies that I have. But if we can do that as professionals in our side of the business, a lot of good can be done to these people. And I think that insecurity, if we can dispel mathematically, their approach to investing can change also, right? My mother buys small caps. I don't. Because that has been dispelled, She's pretty bindas about her money. Because she's earned that much. She knows even if she spends this much, there is a rest. She's been investing in the capital markets for 15, 18 years. So there is enough amount of compounding happens. But very early, when we started discussing between me and my mother, when it comes to money, we are absolutely unemotional. My agreement with her is she's going to spend everything and go. There is no inheritance required. But she will leave something, that's her wish, but it's not a binding thing on her, and something which we discussed very unamicably. But we said that, if this is the money you have and you start spending this much, the rest will also grow at that much. And then that changed everything for her. So one, of course, they need a lot of handholding because their inclination is to invest in safe instruments, which is actually going to degrade their money. See, what is the basic fundamental rule of financial planning? All your money has to beat inflation. All. So if all your money is not growing at 6-7%, which invariably a lot of their money would be, you're actually losing money. And they don't realize, they feel it's at a safe place. But if it's not getting returns less than inflation, you're actually losing money. So that's where it has to start, education at that level. And a small part of it can be invested in growth assets to start creating further wealth for them. And at your platform, you need to do it because the number of retirees will only grow. Okay. And it's what you give back to them, right? That's not about doing business. I feel that part is not about doing business. It's about helping them lead a far better life. And it's not very difficult to do that.
As you said, right, it's more about your mindset.
Correct.
That's about
it's a
money.
mindset correction.
Yeah, but I think it takes its own sweet time. There are guardrails that we've grown up with, and I think it's a lot of it is influenced by how our parents' relationship with money was. We learned that and unlearned that.
Yes. So between my parent, me and my son are three different investors, and my son will have, and your generation will have no correlation with the way we invested. It's a reality because you all are far more aware of and far more open to investing. We are caught in our past. I'm still caught in a lot of insecurities that I see in my father. My father is in a different level of investing. Thankfully, they have pension, so they are safe. If they didn't have, all these discussions would have happened with them.
So, money discussions in a lot of families still don't happen. Like, and I'm being very honest, fathers, they don't tell their children how much they earn or, how are they running the house. So how do you think this can be changed? Like, kids don't know, what insurance parents have, or how does families' financial health look like?
See, the best thing that happened, and I can speak for my life, is that very early in my life, my parents always told me what was their take-home salary. Right? And since we didn't have much money, and it kind of justified the whole thing. Itna hi to paisa hai. And they made me do the groceries. So I knew also that that's the money coming in. This is my school fees. I paid for my school fees, and I used to go to a private school, which was a little expensive over government school. Whatever, they provided for my education. They showed me this is the money which came in. This is what it was. And they brashly saved for their retirement. BPF tab karte the. Okay, so some basic financial knowledge they gave me. I could never complain to them why I didn't have pocket money, because I knew the money flow. So that was one of the best lessons they could have given. And they were professors. They were not, they didn't know money, right? But subconsciously or whatever, that's my biggest learning. Today in my house, all the money that I have or is known to my wife. We have three different portfolios. My risk profile is different, my wife's risk profile, and my son's risk. So three different portfolios. All our money, thankfully, is in mutual funds. So there is a password known to all of us. Sometimes my wife says it's not right to tell him, he's now a big boy. But I will continue that knowledge which I had from my father and mother and continue that transparency. In that way, there's a respect for each other in that way. And more important, you start living within your means. All these discussions that we are having, of credit cards or leverage, is living outside your means. Once you know how much money is there, then you start living with that. And then the more the transparency, the better. Especially for insurance policies, everybody should know, right? Otherwise, on that day, if you are going to search whether you have insurance or not, then the basic purpose is defeated. But everything is documented, it's kept somewhere. The will is with somebody else. My son knows who to call, or if there is a date of emergency in the office, who to call outside office. All that is written down.
Very important. And I think your relationship with money in your childhood or what your parents taught you, I think it reflects upon you as in when you grow up. I think two different, it's like if you grow up in a family where conversations around money is happening, your relationship will be better, is what I feel, when you grow up.
Absolutely.
That is very important.
Most important. You be transparent about money. Sometimes I've seen, and I don't want to take names or anything, we've seen parents wanting to hide their money from their children. More often than not, it's about the lack of money.
Yeah.
Is my experience that I had a friend whose kid was going abroad and they had sold a house to provide for that, and they were finding it a little, what can I say, a little not right to tell him that we had to sell a house. And childhood friends, so we were all sitting. I told him, "Gare, do you know dad sent?" So they went red. Ki, why did you tell him? After some time, they came and told me that my son started doing a part-time job there, and he's earning his money. So I was telling you, are underestimating the kid. No? What is wrong in saying that or being transparent about money? Right? The more transparent you are, the better money will be handled. And that's a learning which, because we handle money, we see so many people who don't tell their wives half their money. We see wives coming and telling, okay, don't tell my husband because it's money which they have. It's all in good faith. Okay, yeah. I'm keeping this for that bad day. But the person doesn't know that it's there, right? So, and more important, today because of the information being there, the more transparent you become money with the children, the better children will become on handling money.
So one more thing that I want to touch upon is, again, nowadays people don't have stable jobs. They're making money, again, flipping sneakers or freelancing. So this concept of, that 9 to 5 is not sitting right with a lot of young people. They're making money, which is good. So in that case, right, I'm not going to have a regular income flow. So how do I look at investing in mutual funds then?
So you don't need to have a regular flow to invest. We always say the best day to invest is when you have the money. On that money, are you conscious enough to invest on that day? Right? The more you utilize that day, the better it is for you. In that way, by investing, you actually create a regular flow of money. Right? But understanding that one day, on the day you have the money, is the best way to part with it and invest is probably the best lesson you can give yourself. You don't need money every day, but what you do with the money on the day you have it is most important.
Correct. So there has been a lot of research done on this. Your date of SIP doesn't really matter in the long run.
Again, this is my basic rule. See, at Mirae Asset, we are a fully invested fund. We don't time the market, we don't do cash calls, nothing. You've seen our performance. It's a 16-year track record. So we firmly believe on the day we get our salaries, we invest. Say sometimes we get a bonus or whatever, that day we invest. It's not that we get bonus every year. Sometimes we don't get, right? But always the cardinal rule, the best day to invest is when you have the money.
Get it. So now I want to discuss, someone who wants to get into this as a career, right? I want to become a fund manager. How do I get there? And what do I have to do? What are the skill sets required? And what does the future look like?
You are talking about the topmost professional of our industry. Right. Okay. It doesn't come easy. Right? It's a lot of bottoms of hard work and one has to be prepared for it. Invariably, one sees the glamour side of the fund manager. Right. One does not see the grind that leads to becoming a fund manager. And trust me, it is a grind. You start up at the bottom as an analyst. And I would really request anybody aspiring to that, to become an analyst in a broking firm. Start at the bottom, start identifying companies, back yourself on building calls. Maybe start building a small portfolio on your side, on your calls. And don't get swayed away by all the noise. Back yourself on your ideas. Start as early as possible. You don't need too much money to buy stocks. One stock also you can buy, but build a portfolio. See how it performs. If you are on the right track, back yourself more. But at the same time, continue being an analyst. As you start becoming good analysts, you should service good managers and impress upon them. The more stock ideas you give them, the more they will like you. In that process, you graduate to becoming a decent analyst. And after being an analyst or gaining some domain knowledge, you can then venture to become a fund manager. Yes, it's an incredible job profile. It is the most powerful job profile. I'm in awe of fund managers, and I'm not one. So almost at a, what can I say, at a worship level is how I treat them, because to create money for somebody who knows how to create money is a different kick in life. The money they get is from people who already know how to make money, right? But those successful people come to them to create their wealth, and there cannot be a bigger job in life, is what I feel. But please concentrate on the education part, please concentrate on the grind part, and more hard work you put in, the better it is. It's not for the weak-hearted, because sometimes your best bets can just fly off the shelf and be zilch overnight. But more you overcome those, what can I say, mistakes or wrong calls, the stronger you become. The more you learn from your past mistakes, the better you become. It is a grind. We open for that grind. Then the easier part is to become a fund manager. Then your fresh journey starts. To survive as a fund manager for 20, 30 years is a different task altogether. It's a perpetual grind. So if you're up for it, please do it. But make no mistake on the hard work that is required. The other part, most important, is when you become a fund manager, anybody in our trade, the one thing that is given is integrity. If you do not have the integrity, then this is not the line from you, because the monies you will manage is fairly large, and every time there'll be a shortcut. Every day there'll be a shortcut. It's very easy to fall for it. You fall for one, you are finished. And the last thing you would want to do in your life is, lose this profile because of some integrity issues. Then you are tainted for life, right? So a lot of hard work, a lot of discipline, and most important, a person with integrity is the one who qualifies. You gain skills over life, over a period of time. That's not the bigger issue. The bigger issue is, can you sustain your integrity for your entire life? Then you become a great fund manager.
So as we, wrap up this session, just help our viewers, with 3 things that you should absolutely not do for personal finance.
I think one thing that you should not do is try to ape somebody else's life, because it's not yours. What you should not do is not having a goal in investing. The third most important thing is not reviewing your portfolio. I think review and rebalance bring a lot of alpha to your portfolio. 3 things, don't invest on your neighbor's investments, because they are not yours. Know why. Make your investment tangible, is what I will say. And on the day you've achieved your goal, just go and live your goal.
Yeah. People forget to enjoy money. You're running behind creating money, saving, investing.
That's what I said. For a lot of retirement people, we start the session of retirement spending that all of us will scare you to create a retirement kitty. But in that process, we'll probably take away that spending ability from you. But you invested for a goal. On the day of achievement of that goal, please go and enjoy the goal.
Got it. Thank you. Thank you so much for your time. We've learned a lot about money and mindset about money. Thank you for your time.
No, thank you so much for having me. I'll just end by saying there is a risk to investing, there is a risk to not investing. Today, the risk to not investing in everybody's life is far greater. Yeah? Thank you.
Thank you.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.